Despite the fact that we may have technically been on stage 7 load shedding last week, according to the Bureau for Economic Research, the country's economy has managed to grow by 1.6% in the third quarter. Let's discuss this more with the chief economist from the Bureau for Economic Research, Hugo Pienaar. Mr. Pienaar, thank you so much for your time this evening. So we've managed to achieve positive economic growth this quarter, but you're saying that severe load shedding that hit us last week is likely only going to impact growth figures a little bit later on this year. What are you predicting for those growth figures?
Well, perhaps I should just say, you can see in terms of my background, I'm suffering through load shedding as we speak, as we all are. So I think in the third quarter, there were some specific factors that probably helped to mitigate the impact of load shedding, at least in terms of the official numbers. So we must bear in mind that the second quarter of this year, we were, of course, contracting in terms of GDP. So we come from a low technical base. We were bouncing back from the floods in KZN in the second quarter, and also from a prolonged gold mining strike in the second quarter. Now, and then I should also say that the third quarter was the first quarter since the fourth quarter of 2019. So since before the start of COVID, that there were no restrictions, mobility restrictions on the economy. So it was almost like a normalizing quarter. So we think going forward, these normalizing effects will start to fade, and then we'll probably see the real impact of load shedding coming through in the actual numbers. Now, of course, I'm not saying that load shedding did not impact companies and consumers in the third quarter. Clearly it did, but it's just because there were these countervailing forces that shielded the economy in terms of the overall GDP growth number.
Now, you're saying that technically last week we reached stage 7 of blackouts. Can you tell us how you calculate that?
So, of course, we focus on the stage of load shedding as Eskom refers to it. So last week at one stage we were at stage 6. But that is only part of the story. What Eskom also does is so-called load reduction. So besides imposing stage 5 or 6 on the economy, they also ask companies, the big energy consumers, to reduce their demand for power. So that's sort of on top of the official load shedding numbers. And then if you add those two together, technically we were even at a highest. So if you add those megawatts that are taken off those demand that is being reduced, we probably were at around stage 7 already at times last week.
Now, these companies that are asked to curtail their energy consumption or reduce their load usage are usually big consumers of energy. So what are we looking at? And they're also generally big producers in terms of production, companies in the mining sector, for instance. What does this mean for economic activity during that period?
Well, of course, it then curtails your production. So if I'm a heavy manufacturer, or as you suggest in the mining sector in particular, so lots of these companies have, of course, over recent years put in place mitigating factors. They put in place generators, or they're moving to solar, etc. But it can't. But the problem is, once you get past stage 4, you get to stage 5, 6 load shedding, those mitigating factors are not sufficient, and then it really does start to have an impact on production. So if we have prolonged periods of stage 5, stage 6 load shedding, I think there's no doubt that you're going to see the mining production, the manufacturing production numbers actually come under quite a bit of pressure.
Koeberg Unit 1 has gone offline for planned maintenance and will remain offline for months to come. Given how things have been going for the past week with stages 5 and 6 intermittently, are you worried about the likelihood of prolonged higher stages of load shedding and the resultant economic impact down the line?
Certainly, and I mean, the last couple of weeks, Eskom has been warning us that we should expect elevated levels of load shedding, at least for the next 6 months. So if we think of real GDP growth in 2023, so we must bear in mind that the world economy is less conducive. A number of our trading partners' growth is expected to slow down there. If we then layer the expectation of significant load shedding domestically on top of this more constrained global environment, we think that real GDP growth in South Africa could slow down quite materially next year to around 1%. And this year, it's probably now going to be above 2%. So our growth rate could actually halve, at least that's our expectation, that our growth rate can actually halve in 2023. So not a positive outlook at this stage. Of course, it's early days. Lots can still happen, but where we sit today, the outlook for next year seems to be quite constrained.
You're also concerned about renewable energy and IPPs, especially a lack of wind power projects. Tell us what you're seeing.
So this was announced last week. So we know that the government has initiated these so-called bid windows. So these rounds where they procure power from so-called independent power producers. So these are renewable energy producers, mainly solar and wind. Now, for the bid window 6, where there was a big announcement back in July where the president said that for that specific window, they are going to increase the amount of megawatts procured to above 4,000 megawatts. So this was said to be quite a significant procurement round. Last week, it was then announced that we are only able to procure, I think it's something like 800 megawatts. So only a fifth of what was set out to be procured is actually going to happen. And this is because of constraints in terms of the Eskom's distribution network. So we can't have more. So even if the IPPs or the independent power producers bid for these projects, there's not enough capacity to connect more than 800 megawatts additional to the grid. I'm probably simplifying it, but that in a nutshell is the problem. So the bottom line is we are now set to get much less renewable energy on stream over the next 3 to 5 years than we hoped for before.
Certainly not an encouraging picture. Thank you very much for speaking to us. Chief Economist from the Bureau for Economic Research, Hugo Pienaar.